Welcome to the Price Discovery Podcast. We got Alex, Markle, Mike Matenga, and John Cutrone here to talk about markets, prices, where we think things are headed. So I think we're gonna kick off here talking about high-level markets, Bitcoin, equities. You guys want to start with Bitcoin?
Sure.
Yeah.
Alex, what are you seeing? What are you seeing with Bitcoin recently? Where do you think things are going?
Yeah, I mean, I'd say I'm a slight bit optimistic for the first time in a lot of time. I'm not completely convinced like it's the bottom yet or anything, but in the short term, things do look a bit good suddenly. Like I'm a bit positive on the market here, mainly because on on Monday we had Saylor MicroStrategy announcing that they sold like 250 million worth of Bitcoin, and we got like a very short term sell off, like 2 to 3%, which then got bought up, right? And now we're trading higher, couple percent only. Like it's still very grindy, very not pretty price action or anything, but I kind of see that as the first little sign of strength potentially, that 57 58K might have been a short-term bottom. That being said, the way I think about like this whole MicroStrategy situation is, I think like in the short term, we've probably kind of run out of this narrative that like MicroStrategy has to sell a lot, just because like the market is kind of showing the strength. So it kind of looks to me like this whole book about strategy like blowing up, it's not over yet, but just like this one chapter is kind of coming to a close now, and we're gonna continue that story at some point later this year, maybe.
Is there like one indicator or metric that you're looking at, or that gives you that signal?
I'll mainly look at just MicroStrategy's balance sheet and how much cash they're raising. So they haven't raised enough yet. They think they still need like another 10 or 12 billion in cash to essentially retire Stretch. They don't have that yet. So until then, I think like this MicroStrategy saga is still gonna continue at some point in the future.
Mike, what do you think?
Yeah, I tend to agree with Alex in terms of, just first of all, there seems to, like, I guess like the downside risk, especially on like the short term. I think that's, I think for this week that that risk is like much less. So I guess like the other direction is sort of like up. This week it's just been a little bit like choppy and grindy, but I think it's just good. We had sort of these two, I guess, like bearish events driven newsprints, which was I think Saylor, and then obviously the escalation of the Iran war, but really push BTC to sort of like break structure on sort of like low time frames. The market sort of like brought that up pretty aggressively. So I think, I guess just based on that, I would be like pretty optimistic. I guess like in the short term, obviously we're still, in the sort of like bear market for BTC. But I mean, I think, probably, target, I guess like, 66 days, 7s, mid 60s in terms of where to like reassess whether BTC is gonna sort of like go up and look good again, or are we just gonna sort of continue chopping and grinding down in the medium to long term? And yeah, also I guess like also on the MNAV's point of view, just monitoring MNAV as well for Saylor, and just looking at the strategy balance sheet is where you'll probably see the next signs of the markets feel towards I guess like what strategy is going to do. But I'd also just monitor like US session, just seeing whether we're going to get like I think he executes quite evidently. So if you just start seeing TWAP selling again, then something's definitely happening. So I'll just also closely monitor that for any interesting signs in regards to a change of the market, BTC's market regime.
Yeah. I unfortunately I tend to agree with you guys. Maybe you guys are shorter time frame traders than me. You guys are trading days and weeks often, right? I'm usually trading months and years, even though we each cross over. Yeah, I can't help but think that we haven't hit the bottom yet. There's not a lot of the typical signs that we've seen in the past where you have a ton of coins change hands at the bottom. We haven't really seen that. And there's just kind of like too much hope, on the timeline. There's too much optimism that we've bottomed. And I feel like we need a bit of we need some blood on the streets, just like, just like from a vibe perspective. And, you can't ignore seasonality here, right? I think you typically get this like July scam pump after like some June weakness. And then, then you just have that end of summer, early fall, like capitulation. I think like 55K is probably a good place to set your bids. But it's only if you're that type of trader, right? If you're trying to scalp 10-20%, which many people are, yeah, I think that's like a pretty fair trade. But I'm of the belief that Bitcoin will be at 100 and 200K in the next couple of years. And so you could just start buying, around 60 if you really want, or just start DCAing, just set like every week, every month. You could just DCA the rest of this year and actually probably make a couple times your money. So it just depends on what you're trying to do. And on the Saylor point, I think we called it on the last pod, right? The last pod, everyone was like tripping over themselves saying Saylor was going to be a Luna 3AC situation. And we were saying, look, like he just has to neutralize himself. He just has to like have enough cash where people stop thinking about it as much. And he's just going to continue doing his thing. He's not going to like unwind and blow up and puke all his Bitcoin. He's just going to like sell something, whether it's, Master or BTC, to preserve his baby, which is Stretch, right? Stretch is his holy grail of financial engineering until he comes up with something else. I still think he's going to, get into more. He like released his little plan. What's not on that plan is options. I think he's going to get into options at some point. He's going to start overwriting. You heard it here first. But yeah, that's my take. Any last thoughts before we talk about equities?
Yeah, I mean, I hope he doesn't start with options. And that sounds like a terrible idea.
Well, he would crush vol, and then we could buy cheap vol.
Yeah.
Yeah, I mean, yeah, definitely. He would just get like taken out of his Bitcoins essentially. He would just get called on like.
Look, he's a buyer at any price. He should be happy to buy, sell some puts.
Yeah. The thing is, I don't see him like selling puts. I think if anything, he's just gonna start selling calls, which means like he's gonna get taken out of his Bitcoin. Or if he sells puts, then that's the problem with the puts is like it's gonna be like some cash secured puts type of thing, and like US dollars is the one thing that he doesn't have enough of.
Yep.
So I think in both cases, like someone the size of Saylor, like it's gonna be very easy to spot him, like in the market, like in like open interest numbers or whatever. So like whatever he does, like selling puts, selling calls, like he's gonna get hunted.
You know, he hasn't cared yet about execution and entry price. He's been top blasting and selling at the bottom for a couple of years now.
Yeah.
Have
you seen this tweet by like one of the strategy guys who was like talking about how strategy is now, kind of like basically like an active trading firm?
It's just a hedge fund.
Yeah, it's just a hedge fund that just buys high and sells low.
Oh. It's a money-losing hedge fund. Yeah. Oh man, I don't know. He's one of these guys where you can't really bet against him too much. I mean, you never know, right? Like, has he flown too close to the sun? I don't want, we could probably digress here, but he always tends to have a trick up his sleeve. So he could just still, sell some Bitcoin, sell some stock, and just, have $1 billion or $2 billion, cover his dividend for a year or two, and everyone just moves on. But all right, here's a question. What causes the final capitulation, right? And usually we're rationalizing, right? Usually it just happens and then we say, oh, it's because of X, Y, Z. But I think it's fun to think like, what could be that event? One idea is there, and we don't have to like go too far into this, but we haven't had, the bodies haven't floated to the surface after 1010 yet. Okay. Now remember 22, you had GBTC, which is kind of like what's happening with strategy. Now it led to this domino effect of 3AC and Luna, then FTX was the very last one. So is there someone who's like on life support that we don't know about that's about to go under or something in the next few months?
Can't tell you. Like, I think the market is gonna show its hand at some point. Like, it feels like it's kind of too far away to play a role at this point. Like early this year, like I think that would have been still like a decent probability that like something, like some company goes under, but now it feels like the risk should have been cleared by now. That's really just subjective impression.
Vibes.
Yeah.
I mean, what GBTC was like Q1, sort of, right? Well, it was the war. GBTC was kind of Q1, Q2 almost. Yeah, like 3AC was Q2, and then FTX was like September, October, right? September. So yeah, we'll see. I think like, when it comes to risk management, I think you have to have that on your bingo card, and kind of stress test that.
Yeah. I mean, I think there's plenty of other stuff, like anything that's like macro risk off, we get like a 20% drawdown on equities, like that's gonna blow out like strategy and stretch and Bitcoin along with it. Pretty sure about that.
Great transition. Mike, are you following equities? I mean, usually,
yeah, no.
These days crypto is like, yeah, sorry, go ahead. I was on mute.
Yeah, no. I do follow equities. I think just to see where is the sort of volatility in equities right now, and I think it's still sort of like with these microchips. I mean, we got like pretty lovely sort of like entries if you're trying to get into sort of like these microchip stocks, and quite a lot of interest in terms of just like even on my timeline, just seeing crypto traders sort of like looking at this, and I think that's sort of like a really good indicator of just like lack of interest in Bitcoin and crypto at the moment. So yeah, but yeah, equity seems, I think for this week has been sort of like pretty choppy and sort of like, I guess the news with Iran sort of like introduced this sort of like not tailwind, headwind actually into the market. So that I guess like we still need to see how that's sort of going to play out, and how these sort of like whether things are going to escalate or de-escalate, and how that's going to affect sort of like equities, but also it seems like the market doesn't really like us, so just like higher oil prices as well. So I mean, I guess like we're sort of like in an interesting time where it's like, oh, okay, we're back into this sort of like FIFO sort of Trump trade where he's sort of like going back on some of the work that he's done. So yeah, I guess like I would say actually maybe potentially expect a little bit of interesting sort of like volatility ahead, especially if you sort of start to see oil prices get back into the hundreds and things. Then we're sort of like into this new, not really new, but back into this narrative of just sort of like inflation concerns, which is sort of like going to be like tied to monetary policy as well. So I think we're sort of like transitioning into quite an interesting paradigm if we start to see more escalation in regards to sort of like the Iran war as well.
Alex, what do you think?
Yeah.
Markets in general, and you're based in Korea. What's going on with Samsung and SK Hynix?
I mean,
is everyone getting rich but us?
First of all, yes, everyone is getting rich, and that's the thing about like anything that happens in Korea. Like they have like this insane herd mentality, where like just trends are very pronounced here. Like you see it in everyday things, like when like some new kind of cafe chain or whatever opens, like people just love lining up because they hear about it on the internet or from their like friends and stuff. So Koreans, they just love to FOMO stuff. That's just sort of in their nature, and that's why like whenever like the market in Korea trends, it trends really hard. Like, so whenever you kind of see like the market breaking out on like Kospi, Kosdaq, or like any Korean stock, you can basically always just buy the breakout and just hold it, and like it's always gonna run much higher than you think it's gonna run. And yeah, I mean, that being said, like people are printing on Korean stocks. Samsung, SK Hynix been doing amazingly well. However, like they have like Korean retail has introduced a shitload of leverage into the market now. So there's this 2x levered SK Hynix ETF, which is trading in Hong Kong, and which is doing like ridiculous amounts of volume. It's the most traded asset in Hong Kong. Been like that for like a month or two now. AUM has grown into the billions, so that's just billions in like levered exposure on SK Hynix. And on top of that, you have just Korean like private retail, basically because you don't have like any options on stocks in Korea or like futures, and you also don't get like actual margin from your broker. So they have like these basically margin firms which you can go to, and like you pledge like some of your assets, like real estate or whatever you have, and they're just gonna give you margin loans. And these margin firms, they've been running at like max capacity for the last couple of months, and the market has sold off. like SK Hynix levered ETFs, AUM hasn't collapsed, hasn't come down. The margin debt also hasn't come down. So basically, market is like 30% lower on like these stocks, but like the leverage has basically increased. So yeah.
What could go wrong?
Yeah, what can go wrong?
Yeah. I mean, yeah, you hear stories about like folks in Taiwan like mortgaging, leveraging all their assets to buy these stocks. There's all these kind of banks set up to do that. I think the luxury market in Seoul is just like mooning right now, just like everyone buying apartments. So yeah, like you don't like to see those kind of things. And you have to remember like these memory stocks have these crazy cycles. It was like just a few years ago where I think SK Hynix almost got bought by Micron because they were like way ahead with DRAM and there was like no buyers yet and they were about to like go under. So yeah, you have to keep that stuff in mind too.
Yeah.
Yeah, I think like equities broadly. I mean, I don't know. It's all just being controlled by the White House really at this point. I mean, yeah, I think like Iran like is kind of being chilled out here. I think it's just because they want to run it hot between now and the midterms. And then as soon as the midterms are over, I think they're just gonna walk the market right back down all through next year. Or at least maybe like the first 2 to 3 quarters. And then just to like save the market again in 2028 and be this big hero, for the 2028 elections, which is crazy to start talking about, but they're coming. So I think that's kind of how I'm thinking over like a 2-year time horizon is, yeah, I think you want to stay long here, and then look to maybe de-risk, maybe at the end of the year. But but I mean de-risk. I'm not the kind of guy who like sells everything. It's like you trim 10%, 20%. I think you need to, whether you're a trader or not, you need to probably have a structural long bias to equities and probably hard assets too, just because every major country is in debt. They all need to print their way out of this debt. They all need to debase their currency. And they need to win the AI race, the space race, the defense race. Plus, you have socialism rising, which is leading to OpenAI saying, "Hey, U.S. government, you can own 5% of the company." So the U.S. government's been owning stakes in more and more of these tech companies. I think that's only going to increase, and I think you look at Japan as a model where the Japanese government owns 10% of the stock market. So, I think you have to have this like structurally long bias with all these kind of macro trends happening. And then same thing goes for maybe we can transition into metals here. I still think gold and some of these metals that are going into AI, data centers, space, defense are also probably a good place to start DCAing, maybe over the next quarter, Q3, just because we're not producing enough of these things and the demand's just going to increase. Plus you have these macro tailwinds like inflation, debasement, et cetera. So yeah, I think you can kind of play this sort of seasonality in this month-to-month movement, but I think you want to stay long, equities and metals. I think between now and the midterms, just because they need to run these things hot, in order to at least win the Senate. I think that's the goal here, is that there's no chance with the House, but they just need to keep the Senate.
John, like you as a American voter, like what's your how we non-Americans, we kind of like we hear that the US electorate is like very much very influenced by like markets, and they they actually look at their 401ks and like make like voting decisions. Is that like actually true?
Absolutely.
Yeah.
100%. It's 401k. I mean, it's a mix of things, right? So we're still in this K-shaped economy. So you have the top of the K looking at their 401ks. You know, are they keeping their white collar jobs? Is their house continuing to appreciate a few percent a year? And are interest rates low or not, right? The bottom of the K is looking at the price of eggs, the price of basic, stuff. So inflation is a huge problem for the bottom half, and and then jobs as well on the bottom half. So yeah, it's the wealth effect, and it's just the vibes and the feeling of like just stuff just feels expensive. It's like, ah, man, like let's try something else. Or if your 401k just like is down 30%, you're like, let's try something else, right? And then these more social issues tend to be much smaller of an impact than the financial issues. Even though the social ones are what get all the headlines, and you can maybe peel off certain segments of the electorate by being super pro this or anti that. But I think what we saw with the last election was that the Democrats just got like way too heavy on these social issues, and there was like the woke lash is what they called it, and I think a lot of folks, a lot of independents voted for Trump because they just wanted pro business, pro innovation. There was industries like crypto and AI and defense that were kind of being left for dead. They were being pushed out of the country. And as crazy and silly as Trump is, I think like, you're thinking about national defense and retaining certain industries like AI and crypto. And I don't think we would have done that. I think like, so yeah, I'm not like super political, and this is not a political podcast, but for sure, the answer to your question is yes.
Yeah. I mean, you can't deny that like definitely the deregulation, especially when it comes to AI, has like helped the American economy incredibly. Like just look at where Europe is in terms of AI, right?
It's all AI. It's just like, this is the new industrial revolution, and you either have it or you don't. You have the data centers, you have the the AI engineers, the power, all of that, or you don't, right? And like data centers are this really weird like third rail that in politics right now. No one wants a data center in their backyard, but you also don't want I think as Americans, we want to have these data centers. They're not going in space yet, and we don't want to have to rely on China or some other country for data centers. So, yeah, I think we have to own this stuff. We have to build this stuff. I think that's another reason why. And yeah, I think it makes sense to kind of over other equities. As much as I'd love diversification, and I do, you feel overweight in Mag 7, but it's kind of the least dirty piece of laundry here.
Yeah, agreed. I mean, there's always like other pockets and like always other markets which also do well. Like for some reason, like the Swiss stock market just had like an all-time high breakout. Like there's always other stuff mooning as well. I just have to look.
Yeah, I agree. Let's get into those. Let's come with some of those niche pockets of equities on our next pod. Some ideas there. I'd love to hear about what's going on in Switzerland or what the next SK Hynix is in Korea.
Yeah, for sure.
Yeah, I've been starting to dig into some miners and some kind of like commodity producers, because like you can be bullish in all these metals, but the price may just stay where it is. Like we've had a huge run up. I do think we get a price appreciation, but the other side of that story could just be that prices are just going to stay where they are. They're not going to crash, but we just, copper and silver kind of just stay where they are. But the miners are the ones who now print because they're selling this, much higher price product. So I'll maybe come with some ideas there. Let's transition to volatility. You guys are vol traders at heart. What's going on in the vol markets?
Yeah, let me maybe share our dashboard. Let's see. Okay, so we have vol basically trading in the mid-30s on Bitcoin. It's pretty much unchanged, but like slightly drifting down across the curve.
Yeah. Super low, right?
Yeah, it's historically at the lows. Yep. Skew still negative across the curve, like around 5 to 6 points. But skew has creeped up just a little bit over the last 1 to 2 weeks. So that's basically the market saying, just being a little bit less concerned about MicroStrategy. That's how I interpret this. What's been very interesting is, I'm gonna drag this one up here, implied versus realized vol over the last week. So since a couple days, and we've had that before, the basic vol is just structurally cheap. So you can look back for 2, 3, 4 weeks. Basically, vol is trading at a discount to what the market has been realizing. So we had this risk-off period here, but now, since the middle of the week, now we're trading at a vol discount again to the realized volatility, which is just very interesting. So it basically pays to buy options and just delta hedge them and do gamma scalping. I don't quite understand why we're seeing this. It could be structural, just a lot of overriding activity. Though there haven't been any extraordinary prints in the market. It feels like just apathy at this point, I guess. No one is looking at the options market, and if you're one of the few who are still looking, there's some nice opportunities here. So you can just buy vol, delta hedge it, and collect some some nice profits. And that's just based on the market not doing a lot this week, right? That's how low vol has come. We've been trading in a $4,000 range or something. That's nothing for Bitcoin. And still implied vols are lower than that. And if you buy the vol here and then the market does finally pull a move, then you're gonna print hard, because you're not gonna only print on the realized vol, but also probably on some kind of vol spike. So yeah, that's on Bitcoin. Let me quickly check on ETH as well. ETH is pretty much the same. I would say ETH looks potentially even more interesting. The implied to realized vol premium, it's very similar to Bitcoin. However, Ethereum is trading in the mid 40s here in terms of implied vol, and I think that kind of makes it very interesting as some kind of hedge, because I think if like things go south, then ETH tends to extremely underperform and like have double the vol of Bitcoin, like when we do get a strong sell-off. So that kind of makes just buying ETH downside potentially very attractive as like some form of portfolio hedge, for example. Yeah, that's pretty much all I had. Maybe Michael, something you want to share?
Yeah, I was going to say, and yeah, kind of a question as well, like, and something that I sort of like. I do think like, yeah, sort of the markets just entered this sort of like choppy regime. So for me, it's like what I do like is sort of going for like shorting front end, just collecting premium and sort of like longing, I guess like medium to long term tenures and just sort of like wait for some form of move. And yeah, also, yeah, I agree with you in terms of like your ETH take. Yeah, ETH vol is always like much more attractive when something does happen. So, I could see, like I also like sort of a trade where it's like, long in ETH vol, short BTC vol, that once there, once there is some form of move, like you're going to get a very, very strong reaction on the vol market. And then I guess like the other thing that's been pretty interesting is like, and also like curious to get your take is how like sort of skew has just it seems like skew is sort of like collapsing over time, just based on like when the markets sort of like just I guess like rate grinding up. I guess it's more of a phenomenon that we've seen now. So it does also make it a little bit attractive to sort of like just play the skew as well. It's been in a very sort of like we've been in a very strong skew regime for a long time, but that's understandable because we are in sort of like a bear market. But yeah, it does feel like it is a bit more like overheated in regards to just skew, and I think it does feel like we'll probably see, especially on this front end, there's some very, very good trades in regards to just playing, I guess playing the skew. But yeah, that's all I've got on my side. Don't know if you have any sort of like feedback in regards to I guess like skew, and also just sort of like just playing just the tenures, maybe shorting front end, longing back end vol as well.
Yeah. As to skew and just looking at the market in general, having a slight bullish bias, but not a lot of conviction. It kind of does look like a decent environment to punt some like 25 delta risk reversals, for example. Like sell maybe like a 1 month out 60K put, buy a 68 70K call or like a call spread. You benefit from the put skew, and if the market just ranges between 60 and 70, doesn't matter. Like just you haven't paid anything for the position. It's premium neutral. You can forget about it. But in case the market does come back, and I think there's a decent chance you're going to participate completely. So I think that kind of is quite a nice trade setup.
Yeah, I love that. So for someone, let's say the view is BTC just kind of ranges here, typical 4-year cycle. Maybe we get a new bottom in a few months in, let's say, I don't know, low 50s, high 40s. What would be a good way to play that, like let's say between now and the end of the year, where like, basically what options trade could you put on to kind of follow the typical season 4-year cycle?
Sure. Let me. How about we just look at the chart real quick? Still got gold open here.
Nice.
All right. So we've been trading down to 57. Let's say it kind of depends, like on. I think for playing short term, like selling some, 60K or 58 puts kind of looks interesting. Or maybe, yeah, and then buying some calls with that premium looks quite interesting. For longer term stuff, it's I would basically just like broaden the strikes, like space them further apart. Let's maybe just quickly look at the options chain. 1 second. Okay, can't get it loading right now. Okay, it's what it is. Yeah, I guess I would just like, instead of like selling a 60K put, like, sell one that's even further away. I think 50K is probably a decent strike. Sell 50s, buy like some 75Ks. I think that makes some sense. Or just buy some flat out very long dated like call spreads. Call it for March next year or something, 75 to like 90 or 100K. I think that kind of expresses like a nice bullish view, but like you're not overpaying for vol, you're not overpaying for skew, and it's not going to cost you a lot. The fade on those is going to be quite low.
Yeah, I like that. I think it. I think it's just psychologically easier to stay in that, right? You're not worried about bottom ticking or being sidelined. I think that's. I think like just psychologically, it's just easier to sit in that. So that's a really good directional play for those directional kind of traders. How about for more of a delta neutral? Maybe each of you kind of give your favorite delta neutral trade right now.
Yeah. For me, it's clearly just like buying weekly straddles on BTC in like the low 30s. So we can buy a weekly straddle here at 32 vol, and then just delta hedge it continuously. Implied is trading less than realized, and we're probably gonna get to some kind of decision point next week, is what I would assume. So we're either gonna reject at this 65K level, which we're testing around here, which means we're either gonna break through it next week, which means like probably 70K-ish feels feasible in the short term, or we're just gonna reject and like trade back down to 60. So in either way, it's more or less like a 10% move. There's gonna be volatility. So you're most likely gonna realize more volatility than like 30 IVs are implying, which are the market is basically implying a 1.5% move per day, and like I'm very happily like betting that like Bitcoin is gonna realize more than 1.5% per day.
Yeah, I think that's fair. All right, Mike. In the last minute or two, I'll like kind of weigh in here. And same thing. Anything different on delta neutral strategy?
I would just take advantage of. I would be looking for just taking advantage of, I guess, the choppy market regime currently that we're seeing. So if you don't sort of like see a move, like in the first sort of like 2 days, like just short, like end of week, vol, just yeah, short front end vol basically. Like you can use iron condors just to sort of like protect yourself on BTC, and that's where I sort of like see it, especially since there doesn't seem to be like a strong narrative. So I think if you're quite optimistic, like if nothing's really happening, yeah, just short sort of like front end vol, it's going to crash quite aggressively. We've seen that this week. So I think it's something to look forward to, and yeah, I'd say that's from a delta neutral standpoint. And then I still also tend to believe that, yeah, vol is pretty cheap at the moment. So yeah, if there's no moves and you can profit from that, like use that premium to sort of like, position further out the term structure and buy, yeah, I guess like, yeah, buy some optionality, just predicting that like, yeah, we'll probably have break lower. I think we've all sort of like settled on like there's going to be like a 50 to 55K move somewhere along. So, take advantage of yeah, just take advantage of that sort of where we are currently and position for that like a little bit more out, because as soon as you start to see the term structure sort of go up quite aggressively in the front end, then the rest of the vol curve is also going to be brought up. So yeah, that's the sort of what that's how I'd sort of like currently play the market regime. Yeah, that's the sort of opportunities I see.
Love it. Super actionable trades. Thanks, guys. This has been another really good price discovery. Looking forward to the next one. Thank you, boys.
Thank you.
Cheers.